Good morning, everybody. I hope everybody's doing hale and hearty. Well, at least at my end, I'm not doing so much hale because I think I'm a bit down in health today. But there is so much spice to cover in this report that I hope I feel better. Well, it just so has happened of late that I've been a bearer of bad news, isn't it? We've got a number of things to discuss in this report, what's been happening around the globe. Well, as you first see, United Kingdom has been on the brink of collapse. What happened the last week? The UK government buying bonds and trying to save its market from collapse. And who knows what's going to happen next? But it certainly doesn't look so healthy. Overall, in the global economy, I think US is doing better, relatively speaking. I think all the economies are in shit in some way or the other. But US, as we know, their currency is something that people are seeking at the moment. Well, the second thing is a couple of banks are in question right now, the Credit Suisse and Deutsche Bank rumored to collapse. Let's take a look at the stocks for that, shall we? So the first in line is the Swiss bank, whose stock has tumbled from the highs of $70 in 2007 to now $4. Nobody's wanting the stock. People are actually hopping, investors are hopping to the CDS, which is the credit default swap, and the price of the CDS has been increasing. That means the risk profile of the company, the underlying, has been increasing. So this is something that we will get to know by end of this month, what is going to happen with this company about their balance sheet restructuring. And the second line is Deutsche Bank. This is a pretty famous bank, a lot of scandals, even with Credit Suisse. This is a bank from Germany, as we all know. Its stock has been tumbling as well, now down to $7. Nobody wants it. And this is also a bank in question. The reason I'm discussing these banks is if any one of these banks collapses, it's going to have a shock wave, just like how we had for Lehman Brothers, maybe on a smaller scale, but these are major banks for those countries. And in terms of the crypto markets, we are pretty much in the low volatility index of about 20, which means there is a lot of fear in the market. And talking about fear, given that there is a low volatility, this period of consolidation range is pretty much an uncommon phenomena. And well, media always talks about how volatile Bitcoin is. Probably they should start talking about how stable Bitcoin is after all these years. This period of volatility feels more like the end of bear market in November 2018, where we were trading about $6,000. People were shouting for $10,000. And what happened? We crashed by 50%. We came down to 3K. And on the other side, 6 months later, where we were saying that we have not touched the bottom yet, we are still in, we're going to see deep shit, deep bear market, expecting 1,000 when we were trading around $6,000. What happened? We went to 14,000. So this is the dynamics at play. This shows, this particular scenario shows the volatility follows quiet period. So I'm expecting a good amount of volatility in the coming weeks, where we see Bitcoin either going towards 30,000 or it's going to crash below 18,000. So that is something a wait and watch. And second pretty interesting part is the Bitcoin hash rate has been peaking. It's currently about 258 exahash per second. And just to give our viewers just a estimate of what this means is, let's say each one of us, the 7.75 billion people on Earth, start computing the SHA-256 algorithm calculations. Each of us doing 30 billion times a second. So that is the total amount of computing power that is required is this. That is what we are seeing. So that's an enormous number. And the reason this spike has been going up, because I've been following this miner hash rate for quite a while, is of late, recently, miners have been upgrading their equipment. They have been, making their whole system efficient, also energy efficient, that trying to have a trade-off against energy as well, going to renewable energy. So this whole mining industry is very capitalistic. It's basically mine or die. The best in the class survives. It's all balance sheet restructuring. It's compute and innovate, and it's a remarkable little system. And that's the reason, in my opinion, it's been going high. It's instead of saying the new miners join the system, which is always the case. But well, also interestingly, important to note is that well, the question is always coming whether are we going up or are we going to crash another 50%? Well, the answer to that is one of the important parameters to see is the cost to mine, the cost of production of Bitcoin. What is the cost of production of Bitcoin? Well, currently the cost of production for Bitcoin is about $18,000 at the moment as we speak. And what happens if we drop below $18,000? That means a lot of miners will leave and it's going to create miner stress because people cannot pay their wages, etc. And this data is from Glassnode that if Bitcoin, let's say, drops to 12,000, that is the price point at which the best miners in the industry will be left, because the miners who only mine on renewable energy, etc., they can actually trade off for the cost of 12,000 basically. That will be the production cost. So that is interesting. And in the next halving, the price of production, cost of production will double to $24,000. So a lot of interesting data there. So in my opinion, I think we are either going down below 18K or 30,000. I'm banking more towards 30,000 in the coming days. Also, October is historically a great time of rallies. Well, going forward, another interesting data is how long have we been in the bear market? Historically, you would see in 2018 and 2014-15 bear markets, we've been in this kind of phase for about 365 to 390 days. Currently, we have finished 304 days. So even if you were to stretch this a little further, we're going to be in this phase as per the data from the past about until January 2023. That is what I have here, and also the Bitcoin charts. The RSI has been pretty low. It's been pretty stable at the moment. And well, you can see what I can see. The miner's health is also improving. The hash rate is also improving. Although the price has been at this lackluster levels, I see us doing better going forward, uh, given that RSI can only go up. It can fall down, but we have been actually on the historical lows even in RSI at the moment, if you can see this. And the next in line is the XMR USD chart. Nothing much is happening. It's hovering around $140 to $150. I'm waiting for large volumes to pick up on Monero. Only then there is a possibility for us to go above this band, and it's going to follow the likes of Bitcoin, which is also struggling in this, or maybe it's just relaxing in this silent period before high volatility action takes place. And a couple of things to share is this is the chart of Bitcoin fee versus Bitcoin fee in reward, like percentage of transaction fee that miners get versus reward. Right now, it's about 1% the miners earn in transaction fee as compared to the reward of, let's say, 6.25 Bitcoin. But in high volatility periods, like in 2018, this can go as high as 43%. That's pretty crazy. And the next in line is the this is the funny part actually. The Bitcoin versus Monero tweets. Bitcoin has about 200,000 tweets per day, and likes of Monero has like 200 tweets. And I was just thinking why this happens. And this is likely because the likes of Michael Saylor and other OGs, when they, or institutions, when they talk about Bitcoin, they get 6,000, 7,000 retweets immediately, or Musk talks about it. And then, yeah, it all blows up. And that is why you get likely so many tweets. And for Monero, it's, I see it as used by common man. People don't really talk about it. They just use it. So that's like a little fun contrast I wanted to share. Well, that is all from my side in this report. I hope you enjoyed it, and I would see you in the next price report. Have a good one.